Hello, in today's video we're going to be discussing trading stock options with the day trading GPS Stocks-ETFS Daily Key Levels indicator. Today we're going to be discussing the Friday, September 12, 2025 trading session for Tesla. This indicator can be used on all major stocks on U.S. exchanges, on the NYSE, over the counter, as well as NASDAQ and Amex. It can be used on both stocks and ETFs like QQQ, IWM, SPY, and many other major ETFs, as well as stocks. Okay, so this indicator in the pre-market from 9 to 9:30 Eastern New York time will generate the levels on your chart. For stocks and ETFs that typically have regular pre-market trading, you'll see the levels on your chart as early as 9 a.m. Eastern New York time. For those stocks and ETFs that do not have pre-market activity, then you will see those levels at 9:30 a.m. at the market open. But on major stocks and ETFs like Tesla as an example, you will see these levels on your chart in the pre-market at 9 a.m. Eastern New York time. The main level for the session to pay attention to is the bull-bear KPL, which stands for bull-bear key price level. This is the indicator's key bull-bear pivot for this trading session. The levels above the bull-bear KPL are your take-profit levels for entries that are triggered from a bullish signal by the bull-bear KPL level. The prices below are your take-profit levels for bearish entries on bearish entry signals triggered by the bull-bear KPL. The midpoint levels above and below the bull-bear KPL are your stop-loss levels, your standard stop-loss levels for bullish and bearish entries on entry signals triggered from the bull-bear KPL. So as an example, on a bullish long play that's triggered by an entry signal at the bull-bear KPL, your stop loss would be mid KPL S1, which for today for Tesla is 368.33. If instead we got a bearish entry signal today triggered from the bull-bear KPL level, then your standard stop loss would be the mid KPL R1 level, which today is 371.42 for Tesla. Okay, so at the 9:30 opening candle here for the New York RTH trading session, that's when you can start trading options on stocks and ETFs. So even though you get the levels at 9 a.m., if you're trading stock, then of course you can trade stock in the pre-market as well. But if you're trading options, then you have to wait till 9:30 for the opening candle. The opening candle here, we're on a 1-minute chart. Keep in mind that the best trading time frames for this indicator are 1 minute, 2 minute, 3 minute, and 5 minute, just depending on what sort of time frame that you'd like to take your entries off of. Typically, it's preferred to use the 1 minute or 2 minute chart time frame on volatile stocks such as Tesla. Okay, so on this 9:30 a.m. candle here, it opens above the bull-bear key level and also closes above the bull-bear key level, setting the bullish tone for this session. So your entry would be on this candle close on the 9:30 candle, which occurs on a 1-minute chart at 9:31. If you're trading options, which that's what we're looking at today, your first option would be taking an at-the-money strike on the strike closest to the entry level that the bullish signal is given from. In this case, that's the bull bear key price level of 369.87. So the closest at the money strike to that price is the 370 strike. Today these are 0 DTE options because Tesla options expire on Friday and today is Friday's session. These levels are updated every trading day, and as we said, for stocks that have regular pre-market activity and ETFs that have pre-market activity, then you would get these levels at 9 a.m. Okay, so your choices are either taking an at-the-money call at the 370 strike, or you would look to the first main level or the first midpoint level above the first main level. So the first main level is R1, the first main level above, 372.97. The closest at the money strike to that price is the 372.50 call. On the mid R1, R2 level of 374.52, the closest strike to that price is the 375 call. So depending on your risk profile and also which strike that you prefer, you would choose either the at the money here, slightly out of the money here, or a little further out of the money here. Generally, you do not want to get strikes at R2 and above, because generally we're looking for a move that is at least up to R2 or above on volatile stocks such as Tesla. Okay, so here we have the data windows, the data box for the 9:30 a.m. 1-minute candles on the 370 call, the 372.50 call, and the 375 call. The 9:30 close of the 370 call candle was 448. The close on the 372.50 was $3.30, and the close on the 375 call was $2.31. So that would be your buy price on each one of these three calls, depending on which one that you prefer. Your stop loss, as we mentioned earlier, since this is a bullish trade triggered from the bull bear key price level, would be the first midpoint level below the bull bear KPL. So your stop loss would be 368.33. So a price retreated back down and touched or wicked through 368.33, then you would be stopped out. In this case, it did not come close. In fact, it did not even breach the bull bear key price level. Instead, it continued its trajectory up. And here, on this candle here, it hits the R2 level, which is our minimum target, which is TP1. And this is a two-level move, 2 levels above the level that the bullish entry was triggered from. So from the BBKPL to R2 is 2 levels. The 370 call is now 760. You paid 448. The 372.50 call is now 576. You paid 330, and the 375 call that you paid 231 is now almost doubled, and it's 425. Just a few candles later, it hits TP2. TP2 would be the next level up from this, the next midpoint level of mid R2, R3. That's a 2.5 level move from the bull bear KPL. The 370 call that you paid $448 for is now $10. The 372 call is now $8 on the hit of this level, and the 375 call is now $6.40 on the hit of this level. The reason why you have all of these TP levels and we have level to level trading is most people in trading options will trade multiple options. So if you're trading a 5 lot or a 10 lot or a 15 lot or a 20 lot, then you would want to scale out at each one of these levels. Now you can hold, but nobody really knows how far in advance it's going to keep going up. So the most prudent thing to do if you're trading multiple contracts is to scale out at each level as it goes up. If you're trading just one contract or two contracts, then you would need to make a choice between what is the minimum target for you, given that the fact that you're only trading one contract or perhaps two contracts. If you're only trading that amount of contracts and you have to get out 100% instead of scaling out, then what you would want to do is adjust your stop as price moves up. So your stop is here. When it hits this level here, you would want to move your stop at least to the R1 level, or if you just want to, if you're not closing out here, if you only have one or two contracts, if you are instead doing your stop loss by dollar amount on your options, then you would want to make sure that you go ahead and lock in enough profits that you feel comfortable with at this level. So if it does retrace back down, that you will still, even if you get stopped out, have a profit on the day. Okay, so our last level here was mid R2, R3. The next level up is when it hits right here on this candle here, and again it hits it on this one right after it, and that is the TP3 level. That is a 3-level move. So we have a 2-level move, a 2.5-level move, now a 3-level move, TP3. So that's a 3-level move from the bull bear key price level to R3. The 370 call is now 1375. The 372.50 call is now 1068. The 375 call is now 859. The next level move up here is TP4 at mid R3, R4. That's a 3.5 level move above the BBKPL. The 370 call is now $15.90. The 372.50 call is now $13.12 on that candle close. And the 375 call on the candle close is $11.20. Next level move up, we have TP5, which is a 4-level move from the BBKPL to R4. The 370 call is now $17.50 on this candle close. Excuse me, not on this candle close. This candle actually wicked off of it. So this would be on the touch of this level here. So on the touch of this level here, it was $17.50 for the 370 call. The 372.50 call on that touch was $15.55. The 375 call on this touch was $12.77. The next move up is TP6, which is a 4.5 level move. So that's the midpoint between R4 and R5. So that's 4.5 levels from the BBKPL. As you can see here, this was a strong candle. So on this candle close here, where it touched and closed slightly above, the 370 call is now $21.93. The 372.50 call is now $19.45 on that close, and the 375 call is $17.05. As you can see here, TP7 would be a 5-level move. It didn't quite make it to TP7, so we're not doing the prices for this high here, but prices did move higher from here, but it did not touch this level. All right, so as you can see here, the at-the-money call, and we're giving this from the entry to TP6, the 4.5 level move. 448 entry to 21.93. So that's almost 5 times the 448. On the 372.50, you have 330 here and 1945 here. So that's almost 6 times from the 330. And finally on the 375 call at 231 entry, we have up at TP6 1705. So you can see how these different options, whether you're going slightly out of the money or a little bit out of the money versus at the money, react on a large move such as this. Going back to just the minimum move here, TP1, which is the 2-level move hit at R2, the 370 call was from 448 to 760, the 372.50 call from 330 to 576, and the 375 call 231 to 425, so almost a double here. When we get to the 2.5 level move, this is almost a triple here on the 375 call. It's a little bit more than a double on this one, and it's just at a little bit more than a double on the at the money. Okay, so next we're going to look at the Thinkorswim charts for these various call strikes, so you can see the candle charts for those particular options. Okay, so first we're going to look at the at the money 370 call option. I have the different level hits marked off here, so you can correspond those to the candles. Here's the 930 candle. This is on the 1-minute chart, same as the one we're looking at. So this is the candle closed above the BBKPL on the 930 candle that closed at 931. Here at 936, it hits TP1, the R2 level, on this candle here. 9:42 a.m. it's this candle here. That's where it hits TP2, mid R2, R3. 9:52 a.m. is this candle here, and that's where it hits TP3, which is the R3 level. 9:56 a.m., just a few minutes later, it hits TP4, which is the mid R3, R4 level, on this candle here. At 10:10 a.m. on this candle here, that's where it hits TP5, which is the R4 level. And at 10:26 a.m., this is where it hits the TP6 on this candle here, and that is the mid R4, R5 level. Next, we'll take a look at the 2 out of the money options. Okay, so here's the 372.50 call option. Here's the 930 candle close, closing at 931. That's your entry candle here on this 372.50 call option. Here is the 936 candle where it hits TP1, the R2 level. Here's the 942 candle where it hits TP2, mid R2, R3 level. Here's the 9:52 a.m. candle here where it hits TP3, the R3 level. Here's the 9:56 a.m. candle here where it hits TP4, mid R3, R4 level. Here is the 10 a.m. candle here, the 10:10 a.m. candle where it hits TP5, which is the R4 level, and the 10:26 a.m. candle here where it hits TP6, the mid R4, R5. As you can see here, it did keep going up further as we said, however it did fall short of the next level up. Next, we'll take a look at the 375 call. Okay, here's the 375 call chart. Here's the 930 entry candle here that closed at 931 on the close above the BBKPL. Here's the 9:36 a.m. candle where it hits TP1, the R2 level. Here's the 9:42 candle where it hits TP2, mid R2, R3. Here's the 9:52 candle where it hits TP3, the R3 level. Here's the 956 candle where it hits TP4, the mid R3, R4 level. Here's the 1010 AM level, 1010 AM candle where it hits TP5, the R4 level. And finally, the 1026 AM candle where it hits TP6, the mid R4, R5 level. And remember, this one was at $2.31. It eventually made a high of 1945 when it fell short of that next level above TP6. So it fell just short of the R5 level. Alright, next we're going to go back to the main chart. Okay, so one thing to keep in mind with this indicator is at the beginning of the session, in the first part of the morning session, your entries are primarily going to be derived from the activity at the bull-bear key price level. And that is why these levels above and below are your take profit levels, because it would be for entries triggered from either a bullish entry from the BBKPL, these would be your take profits above, or in a bearish entry on close below the BBKPL, these would be your take profits below. Again, on a bearish entry from this level, this is your standard stop loss here, the mid KPL R1. On bullish entries, this is your triggered from the BBKPL, your standard stop loss is the first midpoint level below, which is this level here. Now later on in the session, these levels serve a dual purpose. Later on in the session, they can also be used as entry levels as well. So if you, for example, were going to play a bearish entry off of a specific level, you would use the same stop loss process for a stop loss on the level. So let's say, for example, that this had gone up a little bit more and hit the R5 and then started trailing down, closing below the R5. Then at that point, if you wanted to do a short play or a put option, your standard stop loss would be the first midpoint level above R5 on that bearish play. Conversely, if we had price action that was below, and let's say it was on, we don't have the other midpoint levels here shown on the screen. This indicator you can enable by checking off which midpoints you wish to show. So you don't have to show all of them if you don't want. You could just show the ones that are relevant to whatever levels you feel that you'll be trading from on that particular day. But as an example, if price had gone down and we were now seeing price start to show bullish price action down here on the S2 level, and it started closing above the S2 level, and we wanted to buy a call option or take the long stock here, then it's the same process. You would have either an at the money call closest to this price, or you would pick an out of the money call one level above or 1.5 level above, and you would pick the closest strikes to those particular levels. And then your stop loss, your standard stop loss, would be the first midpoint level below S2. Okay, so as I stated earlier, this indicator can be used for all stocks that are traded on U.S. exchanges, and those U.S. exchanges would be NYSE, NASDAQ, Amex, and over-the-counter. For small float, low float stocks, let's say your over-the-counter stocks that might be in the $1 to $5 range, this indicator can generate up to 10 levels above and 10 levels below the bull bear KPL. So if you have that kind of bottle rocket stock that's say trading at $2, $3, $4, $5 and has news on it and is making a gigantic move on the day, then this indicator will adjust to that volatility and you will have up to 10 levels above the bull bear KPL, or in the case of negative news, 10 levels below the KPL. The default levels that are shown on the indicator when you first open it up are the bull bear key price level in R1 through R6 and S1 through S6. You can enable up to 10 levels, R1 through R10 to S1 through S10. You can also narrow it down to just a few levels if you wish to turn off all the levels except for a few. Like for example, if you only wanted to see R3 through S3 and also include the bull bear key price level, then you can do that. The indicator also offers zone shading, so if you'd like to shade zones between R4 between levels, then you can turn on zone shading if that's the way you like to display your screen. Also, the line labels for the levels are individually controlled. So you can control the size of the main levels, which would be your R levels and S levels, and you can individually control the size of the line labels for your midpoint labels. So if you'd like to make your main levels larger and your midpoint line labels smaller, as I've done here, then you can do that. And you also have a wide array of choices as to what size that you'd like to make them, from tiny all the way up to huge. Also, this table here, which displays, as you can see, I just have it on the default settings, which is the bull bear key price level R1 through R6 and S1 through S6. This is also adjustable in size from tiny up to huge. Right now it's on the small size, and you can also enable it or disable it. So if you don't feel that you need to see this displayed on your chart, this table displayed on your chart, then you can simply turn it off. Okay, so thank you for watching this video today. If you have any questions, you can leave them in the comments below, or you can email us at daytradinggps@gmail.com. And we also, if you're interested in purchasing this indicator, all of our indicators are sold on a lifetime access basis, which means you make one payment and then you have the indicator for lifetime access. So you're just making one payment only. If you will email us at daytradinggps@gmail.com, then in return for watching this video, you can request that we send you a promo code for the Day Trading GPS Stocks-ETFS Daily Key Levels indicator, and we'll send you a promo code that will give you a substantial discount on the purchase of the indicator. Also, in the description of this video is the link on wap.com that you can go to purchase the indicator. But before you do that, please email us at daytradinggps@gmail.com and request that promo code. Alright, well, thank you for watching this video. We hope that you will like the video and subscribe to our channel to watch videos on our other indicators. We also have indicators, daily key levels indicators for futures if you like to trade ES and NQ as an example, or you like to trade gold or oil futures. We also have a daily key levels indicator for Forex currency pairs and cryptocurrencies if you like to trade those. And then we also have a daily key levels indicator for trading XPX index options on the S&P 500 SPX index, and we also have a daily key levels indicator for the NASDAQ NDX index if you like to trade index options on that index. We also have videos on those other key levels indicators, so we invite you to watch those videos as well, should you like to trade those types of instruments as well. So again, thank you for watching this video. Be sure you email us for the promo code for a discount on this indicator. And we thank you for watching and wish you prosperity in all your future trading. Thank you.